Hi, everyone, and welcome to today's webinar, Unpacking Communication Tax Compliance. My name is Ashley, and I'm excited to be your MC for today. Friendly reminder that Avalara cannot provide legal tax advice, but we will answer your questions as best we can. On your screen is our safe harbor policy. So please take a moment to review that while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be customized, so feel free to move the windows around. Additional resources section contains related resources. If there are any you'd like to check out, go ahead, click them now. They'll open in another window. Be sure to click them before the end of the webinar because this console will automatically close at the end of the webinar. If you have any questions, you could submit them using the Ask a Question box. We will answer as many questions as possible throughout the webcast and during the Q&A time at the end of the presentation. You can also submit troubleshooting questions in the Ask a Question box. The button at the bottom with the little chat bubbles is for our group chat. This will pop up on your screen if you click it. We encourage you all to hop in there, introduce yourself, make connections with fellow Avalarans. We'd love to know where everyone is tuning in from. I'm tuning in from the Midwest, from Iowa. So welcome, and just drop in the chat where you're from. If you have any technical issues, there's a question mark icon box that has some suggestions, or you can reach out in the Ask a Question box. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit, please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will pop up on your screen for a limited amount of time, so please make sure you are ready to answer when the question appears. Please do not split or tile screens on your computer, as this can affect the placement of the poll question. You must also attend the full 50-minute duration of the webinar to qualify for credit. Once you have met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. Just click the icon to access it. It will open in a new tab and be waiting to download at the end of the program. Your certificate will also be sent in a post-event email. Lastly, if you have a moment, you can respond to our survey on your screen or after the webinar. Next, I would like to introduce our 3 presenters today. So first up, we have Steve, who is the VP and General Manager for Communications at Avalara. Steve has spent more than 15 years in the communications and technology industries, including time at Disney and Comcast. At Avalara, Steve drives the overall communications business unit. We also have Toby joining us as a Senior Tax Strategist at Avalara. Toby is an attorney and senior tax strategist for the communications business unit. And rounding out our team today, we have Cassandra, product manager of communications at Avalara. Prior to her current role, she was a tax research analyst. All right, so let us start with our first CPE poll question. Just a reminder that you need to answer 3 of the 4 poll questions if you would like to receive CPE for this webinar. So the first question is, do you automate tax calculation or compliance? Yes. Tax calculations only? Yes. Returns only? Yes, both? Or no? So take a moment to respond to that poll question, and I will move us on to this slide, and I'll hand it over to Steve.
Great, thanks, Ashley. I guess first we want to welcome everyone. We appreciate you taking the time, and we're excited for today's discussion. just to set the table, I think what we're going to go through is, to talk a fair amount about communications, taxes, some of the specifics across various use cases, as well as some of the broader implications, as well as getting into best practices and some of the capabilities that we offer. So again, welcome, and we appreciate everyone taking the time. So first, I think we just want to set, kind of a high-level context in terms of what types of services are subject to the communications tax regime, right? So obviously, some of these services and solutions are going to be subject to sales and use. But what we're trying to outline here are the products that are also subject to various communications taxes. And so it's a fairly broad landscape, and there are a lot of different ways that these could be categorized, but we'll just walk through these very quickly just to set the table. So the first, under communication and entertainment, this is what we think of as traditional telecommunications services, right? So this is traditional voice as well as voice over IP, SMS and messaging, pay TV and streaming, as well as texting and SMS services. And so what you'll see here is, these services are going to be subject to taxes irrespective of whether they're offered over legacy network infrastructure like traditional voice, which is offered over the public the public switch telephone network, or if they are provided as over-the-top services over the public internet. The next is collaboration. And so these are traditional hosted voice services, right, that will bundle, some kind of software hosting component, as well as offering a range of voice, video, and messaging capabilities, as well as communications platform as a service, right? And we're going to talk a little bit more about CPaaS, but this is essentially telecommunications services that are offered over API and are frequently integrated into a range of various other products. And then the third here are technology services. So these items here, cloud computing, hosting, managed services, software as a service, these are not directly subject to communications taxes. These are the types of services that we frequently see as being adjacent to telecom services and are often offered as a bundle with a complement of voice, data, messaging, or other services that would be subject to communications tax. And then the last is networking. And so I think the key thing that we want to point out here, as most of you probably know, is that public internet is not subject to tax from any perspective, and there are no communications taxes that apply to it. Where communications taxes start layering into data or connectivity services really center on private networking services. So these can be traditional legacy point-to-point services. These can be point-to-point wireless services. These can be various cloud connectivity or software-defined networking services where the core focus of the service is not providing access to the public internet. And so again, this is just kind of the core set of services that are subject to communications taxes. But I think one of the key things that we've seen is that communications taxes over the past few years are proliferating fairly widely. And so, here what we're outlining is not only that communications taxes are being applied to new innovative services, but also that communication services are being offered across a much broader set of industries. And so what we're seeing is companies who historically would never be thought of as a communications company still have an obligation for communications taxes based on the solutions and based on what they sell, simply because these services are more widely adopted and more widely offered. And so, when we think about what's driving the proliferation of communications taxes, there are a couple of key kind of macro trends that we see here. And so the first relates to API-based communications. So traditionally, telecom services were infrastructure-based, right? Meaning that you had to own a network and provide physical wires, right, into a home or into a business office in order to be able to offer those services. But what's happened is that communication services are now not only increasingly being offered from the cloud, but they're being offered via APIs. And so what we're seeing is that communication services are being integrated and embedded into a wide variety of connected products and services and apps. The second trend here really relates to the dramatic rise in streaming services. And so here we're not only referring to traditional standalone streaming services like Netflix that are frequently an alternative to pay TV, but we're talking about really all forms of streaming. And so these could be not only those living room kind of lean back streaming experiences, but what we're seeing is that communications taxes are applying not only to streaming audio services, but also streaming subscription services that could be fitness-based or faith-based, or other forms of streaming services that are often attached to a physical product. So I think the most notable example there would be something like a Peloton device or a Peloton offering, right, where you have a physical piece of exercise equipment, but that's offered with a companion streaming service that would be subject to communications taxes in many instances. And then the last relates to IoT devices or connected devices. And these typically break out into two varieties, right? You've got consumer devices, so you can think smart cameras or secure home security devices, or even smart cars. And really the second is more in a business-to-business context, right? Where you've got sensors deployed, they're collecting information, they're sharing information back to a centralized application or cloud service, and that information is being used to inform decisions or drive workflows or drive other optimizations or outcomes in businesses. And so the key thing here is that IoT devices require connectivity, and that connectivity is frequently private. And so that is another thing that is driving communications taxes across a wide variety of companies. And so these are the three key trends that we see. But I think we want to, one that we want to focus on is API-based communications and illustrate that a little bit more. So here, what we have are telecommunication services, as we talked about before, being available via APIs, right, or application programmable interfaces. And so here to the left of the slide, we've got some examples of these companies: Bandwidth, Twilio, Plevo, Vonage is another example. And these are companies that are offering VoIP, video conferencing, even wireless services or SMS through APIs. And this is the fastest growing segment of the telecommunications industry. And so it's very easy for companies to take these voice, video, messaging capabilities and embed those into their SaaS applications, into their connected devices, and into their apps here. And so a couple of examples we have here are companies like Salesforce, which is a large CRM company, or Outreach, which is a large sales enablement SaaS platform, who are embedding these capabilities and created offerings or modules that they're selling to customers. And so the great thing here is it allows these companies, to monetize these capabilities, to drive more growth and drive more value for their customers. The downside is that it creates more tax complexity. So not only are they going to be subject to traditional sales and use tax, but by embedding these communication services into their offerings, they're now opening up a host of communication taxes, such as regulatory fees, excise fees, utility taxes, traditional CSTs based on the jurisdictions that they're selling in. And because these services are offered from the cloud, they're instantly available across the U.S., across all the jurisdictions in the U.S. as well as globally. And so it opens up a lot of tax complexity, not only from a calculation perspective, but also downstream in terms of exemption management and compliance and returns filings from a communications tax perspective. And so when you think about, embedding these services, for example, in a SaaS platform, a key dimension that you need to think about is communication material to your business, right? And so we've outlined a couple of examples here. The first on the left would be, if you're ordering pizza, right? Or if you're leveraging some kind of rideshare service. If you've ever done that, frequently, you may get a call from the driver, from the pizza establishment. You may get a message that says your driver is waiting on you, your pizza is available. Typically, we don't think of those as being, a core part of the service, right? I mean, there's no black and white rule here, but I think, this would be an example where, from a tax perspective, the communications component of the service would not be a core part of the offering and therefore may not be subject to communication-specific taxes. Now, on the right, we've got an example of a practice management software, right? So this could be software that could be sold to, a dental office or a physician's office. It handles a lot of back office functionality. There could be accounting and billing components there. But frequently, there are modules centered around customer communications and reservation and appointment setting, right? So, if you've ever gotten a text message from your dentist confirming an appointment, or you've ever gotten any kind of outbound dialing communication from those those practitioners to notify you of an appointment, right? In that scenario, you would have the practice management software providing a communications component that they're charging for. And so in this instance, it's likely that that might be considered a material part of the business, and therefore, whatever monetization or revenue associated with that would be subject to communications taxes. And so these are a lot of frequent examples that we're seeing, from prospects and customers that we work with. And then here we've just outlined, some examples of how communication services are being embedded in SaaS platforms for different types of capabilities. And so, if we go through this list, the first is, outbound marketing platforms, right, that are doing some type of predicted dialing capability or providing SMS capabilities to drive some type of outreach and marketing message. The other is contact centers and IVRs and chatbots that are going to incorporate not only voice and messaging, but also potentially video. The third would be around notifications and alerts. So this would be more around customer management, customer retention, right, where you've got some type of voice outbound campaigns, or also messages to update customers on the status of their service, of their account, of their product. And then the last, and we touched on this briefly, is IoT and connected devices, right? We are seeing increasingly whole families of IoT and connected devices having wireless services embedded within the device and are used for connectivity back to some central platform, as well as potentially leveraging SMS or messaging triggered within the device based on certain thresholds or events. And so these are a lot of the examples and use cases that we're seeing within the software as a service space, where communication services are being embedded and directly sold and are a core part of the platform, and therefore may be subject to communications taxes. And so now I'm going to hand it over to Toby, who can talk a little bit about some of the core parts of communications taxes and some of the broader implications.
Yeah, thank you, Steve. So Now let's just kind of explain a little bit about where communications tax is popping up. Talk a little bit, some background about what all's involved, what does it look like, how does it work, and one of the things to kind of address up the top is, some of you, especially if you're kind of new to this space, you may have had somebody tell you, hey, communication tax is really hard, or it's really complicated. And that's kind of inevitably true, right? I wouldn't argue that point. In fact, I might argue that, communications tax, especially here in the U.S., is maybe the most complicated transaction tax events that take place in the world. There's things with higher rates out there, fuel, alcohol, tobacco, some of that stuff winds up with some higher rates. But in terms of the complexity of how you get there, communications tax is right up there. And so at a high level, some of the things that kind of contribute to making it really tricky, first and foremost, the fact that we're talking about multiple taxes, right? So most communication services tend to be subject to a variety of taxes. Now, sales tax in more often than not is going to come into play, but then you can also wind up with kind of a long list of other stuff. And so if you pull out your cell phone bill or your cable bill or whatever you've got at home, there's a fair chance you look down there below the tax line. There might be 3, 4, 5, 7, 10, depending on where you are in the country, different additional taxes down there below the tax line. There's a huge sort of swing in what taxes apply depending upon what type of service it is, right? So if it's cable television versus wireless phone service, wireline phone service, voice over IP services. Obviously, all of those things have different tax treatments, but then also within those bills, there's big discrepancies, right? So if you have a cell phone bill and you've got talk, text, data, features, phone insurance, et cetera, all those things are going to, some of the taxation will overlap like a Venn diagram, and in some places it won't be the same, right? And so you're going to have different treatments. And then there's also some different types of outcomes depending upon the buyer and seller, right? So we have different tax rates and different tax treatments in this business for, consumers versus businesses. We have different tax treatments for, different types of sellers. Regulated companies sometimes may be subject to some things that unregulated companies aren't, for example. Citusing the taxation, figuring out what jurisdiction gets to tax it can be pretty tricky in this space. Inherently with a lot of communication services, they involve things that go from, one place to another place. A phone call or, a conference call might include many places. Trying to figure out which state gets to tax that can sometimes get tricky. And there's different rules for all of the different sort of sub-markets in the communication space, right? So there's one set of rules for wireline phone and one set of rules for wireless phone, and completely different stuff that comes into play for internet, et cetera. Another sort of frequent headache that we have to deal with in the communication tax space is the complexity of the math itself. We tend to think of, application of sales tax, for example, maybe something, tangible goods that you buy is fairly straightforward, right? You have a purchase price, you have, the sales tax rate, we can, multiply one times the other and consistently get the same results. Well, with communications tax, there can be a lot of other sort of elements that contribute to that, right? So we can have situations where you've got caps, only a certain portion of the service is taxable, or there's tiered rating on some of these taxes, thresholds, maybe the tax doesn't kick in until you get to a certain, level or amount of volume that's sold or a certain price point. And then, further, there's a real headache of something that we refer to as tax on tax or tax on fees, which are where some of these communication taxes need to tax themselves or tax other taxes, for a variety of potentially confusing legal reasons. But the upshot is that it's not oftentimes a straightforward, I'm just going to take the price and take the tax rate and walk away with the answer. And then there can be some particularly thorny, issues around language and how we describe these taxes. For one thing, tax jurisdictions sometimes come up with a variety of different descriptions for what amounts to the same classification of tax. So and we'll talk about some of the different high-level categories of tax here in a minute. But from state to state, they may have completely different descriptions that don't really sound alike for these things. And then some jurisdictions require that you actually need to present their wording on an invoice or some specific language, right? So you can't just generically say, this is a 911 fee. It needs to say, this is a San Leandro emergency management fee. And if you don't print all of those magic words on the invoice, you're out of compliance. And so that sort of thing can add to a lot of the additional headache. You obviously have to have some awareness around that. And we've got kind of a high-level overview of some of the types of taxes that we're involved with, which is another further part of what makes this complicated. And one thing I'd point out at the top is that all of the taxes that we typically deal with in the communication space can kind of tend to neatly divide between two specific silos, right? In that there's one group of taxes that pretty clearly legally are imposed upon the buyer of the service, right? So sales taxes, a lot of communications excise taxes. We have some utility taxes or communications services taxes, and then all of the emergency, poison control, suicide prevention now. Those tend to all be obligations that are imposed on whoever's buying the communications service. But then there's also a whole other silo of stuff that is taxes or fees or charges that are collected from the seller of the phone services. So for example, we have things like the universal service programs, which are state and federal programs designed to make sure that everybody has access to phone services, and telecommunication relay programs, which are programs that are designed to make sure that folks with speech and hearing impairments that would prevent them from being able to use phone services can. Lifeline programs for folks who have economic disadvantages that prevent them from being able to get phone services. Various regulatory fees that the agencies that are responsible for regulating these services may impose. There's a whole host of what I'd kind of classify as economic activity taxes, things like privilege taxes, gross receipts taxes, business and occupation taxes, that are all things that are upon the receipts or sales that somebody who's in one of these utility businesses might have to pay. And then there's sometimes some local regulatory charges, things like franchise fees, right-of-way fees, et cetera, that a municipality may impose and require that a cable or phone company, for example, might have to contribute to. So these things tend to be, as I said, legally obligations on the seller of the phone service, but it's extremely common that they wind up getting passed on to the consumer as a surcharge, right? So they'll wind up down on that line with the taxes, the sales tax, et cetera, but technically the consumer is paying the phone company or the cable company or whoever else's obligations for these items, and that can add to the complexity of that calculation, right? Because when those items get passed on as surcharges, it kind of adds to the math that we wind up with a situation that maybe some of these end user items, the sales taxes, the excise taxes, the communication services taxes, sometimes have to tax these surcharges because they're essentially additional receipts. I think that is going to take us to our next CPE poll question.
Yes, I'll hop in. So this is our second CPE poll question, which is, are you currently collecting and remitting communications taxes? Yes, no, and don't anticipate we will, or no, but believe we may need to soon. So if you missed my intro, if you are requesting CPE for this webinar, you need to respond to 3 of the 4 poll questions and attend at least 15 minutes of this webinar. So we'll give you a second to answer that and hit submit, and I'll advance us onto our next slide.
Yep. So I want to kind of talk through, some of those sort of industry verticals that Steve was describing earlier, and some of the tax implications associated with those at a high level, right? So the first grouping is voice over IP, VoIP phone service, the UCaaS and CPaaS, voice and communication solutions that Steve was talking about, this is kind of a commonly grouped together, cluster of related businesses. There's some things that can kind of drive to different tax outcomes and different levels of tax. All of these things tend to have some degree of tax and additional communication tax, but how much there is depends a little bit on some specific facts around the individual business, right? So, for example, with the voice products, we can wind up with some really significant differences in how much tax is there, depending upon whether it's what we call interconnected or non-interconnected. That is a distinction between, does the service allow the user to make and receive calls from the public switch telephone network? Can I call grandma's landline phone or a cell phone, or am I limited to only being able to call folks that are on the same non-interconnected VoIP platform, or maybe a collaboration platform that I'm on, right? And interconnected products tend to be subject to more tax. The FCC has additional charges, universal service charges apply, et cetera. More state and local tax applies typically to those interconnected to the non-interconnected. It's not that non-interconnected is off the hook entirely, but it tends to be less. Nomadic products, you can wind up with some differences in the tax outcome there, right? So there are still some sort of fixed location VoIP services and voice services, things where it's maybe a system that only works at a particular IP location, or maybe it's still a relatively traditional office type of phone system where you've actually got a physical PBX and lots of locally installed hardware and that sort of thing that is not going anywhere without notifying the phone company. And then you've got more nomadic products, right? It's software that's installed on our laptops and on our cell phones, or even nomadic desk phones that you can move around and plug in different physical and IP locations and continue to receive the services. Those are probably nomadic. Bundling is a big deal in this space, right? So there's different tax outcomes in the voice tax world, depending upon whether we're talking about voice services versus features and what type of calling's involved. And so if you mix all that together, you get some complicated tax stuff. We'll touch on that coming up here in a bit. You also have to worry about applying per line charges to these types of services. And so some common things that wind up typically in the per line per month category are things like 911 and 988, which is the newer suicide prevention hotlines. These are frequently on a per line per month basis. And when we're dealing IP voice, it gets tricky because we have some challenges around defining what exactly constitutes a line in some of these services. That's a additional bit of a headache. SaaS, software as a service, information as a service, I'd say kind of generally cloud computing is a frequent area that sees some additional complexity around taxation, right? And so oftentimes I'll have people come and ask me, how do I tax, cloud computing, for example? And first thing I'll tell them is, hey, wait a minute, that's not really specific enough to answer the question. Because you can wind up with some really different outcomes in those areas across some different use cases, right? So we have to kind of distinguish between, are we talking about, cloud computing in the context of, say, data storage versus, processing and hosting applications versus actually offering, more of a software as a service. And all three of those things can potentially be taxable depending upon where you are in the country, but you don't get to the same answers in the same states, right? So, it is important to kind of draw those lines of distinction that, those aren't quite all the same. It's usually going to wind up being sales tax. Sometimes there's a rental tax or digital taxes that can apply in those places. You can wind up with some other complexity around these services as to how do I source it, right? Am I going to source it at the user, the person who's accessing the services location, or am I going to source it at the location where the bill is paid, or am I going to source it for tax purposes at the location where the server is and the actual processing and activity is? And there's some different rules in different parts of the country that come into play on that. Also, you can wind up with some different tax treatments depending upon whether it's public versus private information that we're dealing with when we're talking about these types of information services. IoT, so Steve kind of introduced the concept of IoT earlier, did a great job with that and described some of those different types of use cases, your home automation solutions that are out there, home security, that sort of thing. But also you've got all these sort of sensors and, various industrial applications and, drones that use wireless connectivity in order to fly further and all sorts of things. There's a kind of limitless scope of possibilities of stuff that's out there. Talking a little bit about some of the tax implications, some things to be aware of around that. One thing is that there's a big divide in that space between devices that are designed to operate over, the user's internet, right? So, for example, a lot of the home stuff, if you've installed a smart doorbell or a, smart garage door opener or whatever the case may be, odds are that's going to work over your own Wi-Fi connection, right? You're not going to have to supply any sort of dedicated internet for it. In contrast, if I am, putting a group of sensors out in a field somewhere for agricultural purposes, or I'm monitoring an oil rig, or even like the smart car with the dedicated data connection, those things are going to require typically their own connection to the web in order to function and provide the great features that Steve was talking about. And so that kind of then raises a potential tax implication for the seller of those services or those devices, right? And more often than not, the seller of the device is going to want to try and capture that tax or that sales opportunity to sell those connections. But we get into some question marks, right? Is that really going to be internet access? If it's truly just a device, in the form of a sensor or a drone or things like that, there's a real question legally about, does that qualify as an internet connection? And should it be taxed as internet, or should it be taxed as wide area networking, for example? And there's big tax differences there. If you wind up in the world of wide area networking, that potentially brings in federal regulatory charges and a lot of state and local taxes, as opposed to if it can qualify as internet access, that's a much more attractive place to be. And so that's kind of a hot area of legal controversy these days. And then streaming. Steve also talked a little bit about the impact streaming is having in our space and the amount of proliferation that we've seen, especially through the pandemic years, of people getting involved with new streaming services, and not just entertainment, but also fitness and faith and all those other examples that he was talking about. There were a lot of states that already had some laws on the books that taxed, cable television and satellite television under a definition that referred to a product of pay TV. And so a lot of states were sort of able to immediately extend those taxes to apply to streaming services by way of the fact that they had those kind of broad definitions of pay TV that applied, either sales tax or something else. And, there's been a handful of others that have kind of modified some language to gather up and bring taxes into that space. One thing to be aware of is that it's not necessarily just sales tax, right? There are also some additional, cable industry era taxation. So, for example, like Florida communication service tax, and Kentucky has some communications, excise, and utility taxes, and there's been some other areas around the country with some attempts to impose, other, cable era taxes to these types of services. We've also seen some legislative efforts of some other states that have begun to look at this and talk about making modifications to their taxation statutes, and so we may see some further expansion of that. One thing I would say in general with digital goods, whether that includes streaming, but all other forms of digital content, is to be aware of that there's a variety of considerations that you have to look at for taxation that can drive to different outcomes. It kind of becomes a complicated decision tree, right? So firstly, yes, you have to look at what type of media is it. There's different tax treatment for video versus music and audio content versus gaming or software or any, ebooks, you name it, other types of digital media that's out there. How is it delivered? Is it delivered, on a network that the seller controls, or is it over the top? So for example, there might be differences in taxation for video products sold by Comcast over a Comcast data network versus, Netflix sold over, anybody else's network. And then, type of how the media is formatted, so for example, live television versus, on-demand television, like a Netflix product. There are states that are making taxation differences on that. And then perhaps even more important is the monetization model, so there's different tax treatments for subscription services versus transactional, where maybe you rent a movie or a song for a period of time and then lose access to it, versus, potentially you might be able to purchase it and retain a license right to that indefinitely. And then, finally, we also see a lot of, and this is increasingly getting a lot of attention, of advertising-based, financing models for this, right? So you watch ads, and just like old school television, right? But we're also seeing some efforts, and there's recently been a lot of attention on Maryland, a lot of litigation, because Maryland has had some taxes where they were attempting to tax these types of services via the advertising, and digital ad based content. So that remains kind of an interesting space to watch. Just some high-level considerations as you're looking at the taxation of these services, things that are out there to be aware of that can pose challenges. Kind of alluded to it earlier, but bundling, right? So oftentimes these types of services are mixtures of things: talk, text, and data, and cellular, or voice, video, and internet in the case of like a cable bill, but also within those worlds of kind of the further expansion, you might be bundling, say, a data storage and an upload subscription along with your IoT device, or different types of bundling where streaming media might be packaged with other products. There's a lot of tax difficulty there, in the sense that you're mixing things with different outcomes, and so you got to be aware of that. And are you selling anything along those lines? And do you have the tools within your billing, your ERP, and your tax and accounting systems to be able to manage all of that effectively? There's a lot of different exemption challenges that come up into this, and a lot of resale and other types of situations that come up. If you wind up going into some of these business areas, one of the things that's inherently a challenge with them is that it's kind of inherent with a lot of these businesses that they tend to be instantly global, right? Or instantly nationwide. It used to be back in the day when I first started dealing with this type of stuff, a company would start off selling a communication service in one state, maybe even just a couple of counties or whatever, and kind of grow out from there. Well, nowadays with streaming and over the internet type of services, kind of instantly everybody can be selling everywhere, and obviously that kind of puts the tax pressure on from an earlier stage. And then, additional filing, if you're going to wind up moving into any of these markets, maybe you haven't in the past, are you going to wind up needing to file and register for items that you haven't had to deal with in the past? Are you prepared for all of that? And all the challenges that are likely to come out of it. A couple of kind of high-level tips before we move to our next tax poll question. How can you be prepared to make sure you don't get caught out on all of this? Make sure, if you're in the tax department, that you're kind of ahead of changes in your business. Are you involved in the conversations with your product development and know where everything's going? Do you have resources in place to be monitoring all of those tax changes and kind of spotting where things may pop up in the future? And then, kind of most importantly, then, is, are you equipped in terms of your billing, your tax automation, all of your technology solutions around this? Are you equipped to be able to support any of these directions that your business may go? And that is going to take us to our third CPE question.
Thanks, Toby. So this is our third poll question for those looking for CPE credit. So this is a little bit of a quiz format. If you have a streaming service, which of these taxes are you likely to owe? So sales and use tax, communications, amusement, utility, all of the above. or you're not sure. So take a stab at it, let us know. If you're looking for CPE credit, you do not have to get this correct to get credit. Our system's not quite that smart to know which is the correct answer. You just have to submit one, but I thought this would be a little fun to get people involved. So take a moment, answer that, and I will pass this over to Cassandra.
Hey, Ashley, thank you. Hi, everyone. Thanks for joining us today. So as Ashley introduced for me, so I'm one of the product managers for the communications business unit. And so what I'm going to do is a high-level overview of our products, and we'll get some insight from Steve along the way as well. All right, so Avalara for communications. So we're an end-to-end platform that powers the tax and compliance needs for communications and media providers. So Steve and Toby just walked us through communications taxes, where they might show up, the types of products they show up in, and then Toby walked us through, some of the risks and complications along the way that come with communications taxes. So let's look at how we can help solve some of those challenges. So our product portfolio includes a resilient SaaS platform scaled for real-time or batch processing. And a SaaS platform results in ease of integration through either connectors, a REST API, or file-based batch processing. And we have accurate tax calculations supported by geo-jurisdictional assignment and multi-tax calculation, which you all probably recall from Toby highlighted as a big concern when it comes to communication taxes. So by supporting a multi-tax system, it allows us to support complex tax-on-tax logic scenarios that impact the comms industry, as Toby highlighted earlier. And the content that is maintained in research to support a full array of telecom and communications products and services. And that really ultimately powers our calculation. And on the return side, we have comprehensive and timely returns for filing, remittance, notice management, and reporting. So here come some of the highlights, a couple highlights of what we've been able to accomplish over the last 20 years as we've been able to scale and grow. So just a few quick call outs, over 2.5 billion in invoice line items processed and 8.5 billion communication taxes calculated. And when we get to our returns product slide, we will also have note that we have over 7,000 forms in our comms product. So our support and our product was designed to scale for companies of any size and across any industry vertical. And so as referenced on this slide, we support products and verticals from traditional telecom to Internet of Things. So all of those verticals and services that Toby and Steve highlighted earlier. Steve, since you talked on some of the services that could be impacted by communications, anything to add here? Oh, I think you're on mute, Steve.
Thank you. I would just reemphasize the point that, obviously we've got the capabilities and the content and the rules and the forms to support, not only the tax calculation, both from a sales and use and a comms tax perspective, but also all of the compliance in terms of the forms for each of those various tax types. And the solution is built, again, we've got customers across these segments of all shapes and sizes, right? We support a lot of, smaller companies that are just getting into business, as well as, some very large enterprise companies, requiring support at scale. And so, we are really proud of the fact that our solution has proven to be a good fit for small to medium type businesses, as well as larger global enterprises.
Great, thanks, Steve. So let's focus a little bit on the calc side of our product. So we're a fully featured tax engine, which unifies all tax calculation in a single call. So what does that really mean? We provide an integrated geo engine that delivers lat-long precision, which supports our jurisdiction assignment. So we have jurisdictional support for U.S. international, with U.S. support at the federal, state, county, city, and special taxing jurisdiction level, and for international support at the federal, and for some jurisdictions, the provincial or state level. And so all of this is powered by our taxability, which with a depth and breadth of product service mappings. So we have over 350 communication taxes and unique transaction service pairs, which allows users the ability to map their products to our transaction service pairs, which then results in the ability to do accurate calculation. So tax calculation, as I highlighted earlier, we support a multi-tax system, which supports sales and use, communication taxes and surcharges, and then for international, we support VAT and GST. And then we also have on-demand flexible reporting, which flows through from our tax calculation service. All right, so on the first slide, one of the highlights of our product is our ability to integrate with connectors. So we have pre-built connectors that provide an out-of-box integration to the industry's most popular billing platforms. And so we have connector support from anything from COM-specific billing platforms to just standard billing platforms as well. Steve, anything to add here?
No, yeah, I mean, I would just say, Avalara is very much, a partner-driven business, and our business unit is no exception to that. And so we spend a lot of times investing and working with partners, to make sure that we can provide ease of integration, really into any kind of ERP, billing, invoicing, or subscription management that our customers may have. And I think, when we talked about like the proliferation of comms taxes, one of the big implications for our business is that, years ago, most of our customers were using communications or telco-specific billing platforms, right? Now we see a lot more need and preference around more generalized billing and subscription management platforms like Zuora, Recurly, NetSuite, Oracle, Microsoft platforms. And so we've done a really good job of building out our connector ecosystem to make it very simple for customers to integrate and use our engine. And then once it's in the engine, there's an automatic feed into our returns platform.
Thanks, Steve. And so the other half of our product is, of course, our returns solution. So we have a fully managed and complete compliance solution with both in-cycle and out-of-cycle services. And so highlighted on the slide, some of our in-cycle services include data ingest and validation, returns preparation, filing, remittance, and even returns archive. And then the out-of-cycle services that we provide include registration, notice management, back-filing if needed, and audit support if needed. And one of the key call-outs on our, what we've been able to accomplish and grow to in the last 20 years is just their span of our returns library. And so we have comprehensive returns coverage, support for all 50 states and territories, as well as Canada. And so with over 7,000 forms, we support forms from anything from general taxes, such as sales and use tax, to gross receipts tax, to more COM-specific taxes, which includes, all of the taxes that Toby highlighted earlier: E911, Public Utility Commission, right-of-way, TRS, USF, and utility user taxes. And another product we wanted to highlight was our Avalara Tax Research product. So Avalara Tax Research gives businesses access to a comprehensive and up-to-date sales and use tax research library with simple explanations. So finance and tax professionals can find easy-to-read tax information, rates, and supporting documentation for answers and insights to help with tax decisions. So you may ask, so how does TTR, or ATR now, put this wealth of knowledge at your fingertips? They built a robust database of sales tax laws and distilled those laws into clear explanations to help businesses make informed decisions. They make insights easy to search, understand, and reference, even as products and services and tax laws change. Steve, anything to highlight before we move over to our last CPE question?
No, I don't think so.
All right.
Okay, thanks, Cassandra. So our fourth and final poll question is, what type of events would you like to see in 2023? And you can select all that apply. So let us know. This helps us as we start planning all of our events for 2023. Do you want to see some hands-on training, thought leadership with CPE credit, trade shows and conferences, smaller in-person meetings, virtual webinars, or you're not sure yet. So let us know and keep your eye open for some Avalara emails promoting our 2023 events. All right, so we are ready for some questions. Let me bring everyone up on the screen. So we do have a few audience questions to get to. The first one is from Jason. And his question is, for embedded API services like through Twilio or similar services, so for embedded API services, is it generally always on the SMS communications provider to pay the tax, or does it ever fall onto the purchaser of the API?
Yeah, I can take this. So this kind of fits with Steve's examples earlier, where he kind of was showing the example with the integration of voice APIs into, say, like a pizza delivery app versus the integration of voice APIs into like a, medical office management, platform of some sort. The answer is both, potentially, and it gets at the core question I think Steve was trying to illustrate there is how, material is the communication as part of the final product that's being sold, right? So like if Domino's or Pizza Hut or whoever else is embedding that, API into their application to allow the customer communication, they're likely going to be able to present that they're a consumer of the voice service there, right? That's not the true object of what they're selling. They're selling pizza, and, yeah, it's kind of handy that you can, facilitate the delivery by talking to the driver, but that's not the core of what's being sold. In contrast, if it's like the medical office management software and you're kind of highlighting that a feature, I'm the seller of that service, it's going to be a lot harder to probably make the case that the communication, functionality there isn't a core part of what's being sold, right? I'm probably putting that forward as a feature that this is going to allow you to communicate with your patients and have all this dialogue with them, and that's kind of probably a pretty key element. And so even though functionally this may look a lot the same, right? It's the same APIs, they're both embedded into apps, both interacting with the end user. In that second example, it's probably a lot harder to say that, the core object of what I'm selling isn't involving the communications aspect, or at least it's going to be a tougher sell than it is if I'm trying to make that case around the, say the pizza delivery app or something along those lines. So odds are in that second example, if I'm marketing a platform that is designed to communicate with your patients, I'm going to have a much likelier need to be calculating tax and phone taxes and, passing that on to my customers and dealing with that on the invoicing.
Okay, great. We also had another question. This one is from Rich. Just for context, this question came in, Steve, when you were presenting and you were going over a lot of examples, including the Peloton example. So Rich's question is, where do two-way radio fall?
You guys want me to take that one as well?
Yeah.
Yeah, two-way radio, there's actually multiple different types of technology there. So there are two-way radio type services that are using the commercial mobile radio networking system, the cellular networks. And those tend to fall within a similar tax and regulatory footprint as those cellular services. But also two-way radio can refer to like ship-to-shore communications and some other products along those lines that don't use CMRS type of networks. And those do sometimes have some regulatory treatment. The FCC has classification around those products. They are sometimes specifically called out in state and local, tax statutes. Overall, it tends to be a little less tax than you'd see on, say, an actual cell phone type of service or CMRS or two-way, SMS type of, or CMRS type of product. But there is probably some degree of phone tax. It's just going to be a little lighter area of the spectrum than you're going to see with full-on, cell phone service. Hopefully that's somewhere in there answering Rich's question. Yeah.
Okay, perfect. Well, that is all the time we have for questions today. So thanks to Jason and Rich for asking those. And thanks to our presenters, Steve, Toby, and Cassandra, for putting together today's presentation. Just a couple things to close out quickly. If you requested CPE for this event, you can download your certificate now in the Earn Certification box. It will also be in the post-event email if you don't have time to download it before the webinar ends. Also in the post-event email, we'll include a link back to this console so you can view the on-demand recording, get the slide deck, get those additional resources. Thank you again for joining us today, and this concludes our webinar.
Thanks, everyone.